Good afternoon. Welcome to Future Online Academy. In today's class, we are going to focus on depreciation, a practical examination question which will be applicable to advanced level students and also those who are doing financial accounting modules 1 and 2. Stay tuned and let's dive into the question. Timothy Limited uses straight line depreciation on its motor vehicles. Depreciation is provided from the date the vehicle is sold, from the date the vehicle is bought until the date it is sold. The following information was extracted from Timothy Limited Asset Register on 1 January 2016. You are told that in this question we are going to utilize the straight line method. You are given a table which has two motor vehicles, AAA0473 and AAI8600. You're also given the date of purchase, the cost, the useful life in years, and the residual value. During the year ended 31 December 2016, the following events occurred. January 1, the estimated useful life of AAA0473 was revised from 4 years to 5 years with no residual value. June 30, AAK9531 with expected useful life of 6 years and a residual value of $2,000 was purchased on credit from Fuzz and Wayne for $50,000 to replace AAI8600. A trade-in price of $30,000 was agreed for AAI8600. Required. You are required to prepare the following accounts for the year ended 31 December 2016. Motor vehicles account, provision for depreciation account, disposal account, and also you are required to explain whether it is permissible for Timothy Limited to change from straight line method to reducing balance method. I have read this question and I am going to actually give you something before we go any further. Okay, in this scenario or in this question, you need to know that you are going to apply many items here. What am I saying? I'm saying that you are required to prepare on item 1, you are required to prepare the motor vehicles account. In terms of preparing the motor vehicles account, I will just put the currency sign and you need to write the date. But before I prepare the motor vehicles account, someone right now, you may not have done depreciation, so I'm going to give you an asset account format. In terms of an asset account format, first thing you need to know that you write your debt. Then you write, for example, you are given an opening balance, which is balance BD. You write your balance BD. Suppose during the year, let's say June 30, we purchased some assets, maybe by bank or cash. You write your format. Then suppose that suppose that there was disposal or there was a trade-in, or maybe on December 31 you record the trade-in value here. Then suppose you sold an asset on December 31, you record it as disposal, but the disposal will be based on the cost amount. Then you get a balance CD. Then you write off your balance CD. Remember that this balance CD will become balance BD. I've just given you a framework so that you don't get confused while you still be looking at the motor vehicles account of Timothy Limited. This is how you prepare the asset account. I'm going to actually substitute the given values in the question in the motor vehicles account. Stay tuned, guys. Don't worry, don't panic. This question is simple. Don't also panic on this item. So you are going to write 2016. You are given 2016, and given that, where are you going to get your balance BD? Right now, someone is asking him or herself that where are we going to get the balance BD? You are going to get the balance BD. Suppose you are given the balances for AAA0473 and also the balances for AAI8600. You are given 30,000 for 1 January 2014 and 1 September 2040, given 40,000. You add 30,000 plus 40,000, you get 70,000. That will be your balance BD. The opening balance showing that this is the cost of the motor vehicles which we have in 2016. Then after recording the motor vehicles which you have in 2016, you are told that on June 30, ignore the estimated useful life for this motor vehicles account. Kindly ignore January 1, the transaction was written on January 1, or the additional information. Let's now look at June 30. It is given that AAK9531 with expected useful life of 6 years and a residual value of $2,000 was purchased on credit from Fuzzy and Wayne for $50,000 to replace AAI 8600. Suppose we want to replace AAI 8600, but we did a trade-in. If you do a trade-in, you write your date first, June 30. We have two transactions here. Remember, AAI 8600. Remember, we want to replace AAI 8600. And what are we going to do? We are going, you know that AAI 8600 is the cost of the trading price was 30,000. So you are going to record Fuzzy and Wayne, the name of the supplier, but you're not only going to record the name of the supplier, you're also going to record the disposals. This disposal represents the trading figure. The trading figure was 30,000. But remember, this motor vehicle was purchased for 50,000. Means say the trade-in was 30,000. So you say 50,000 minus 30,000, you get a 20,000. Make sure you have your calculator to make the calculations. Then you are going to record also June 30. According to the format, we have this disposal called disposal. How much disposal? You record the cost of AAI 8600. According to the table which I gave you, the disposal is the cost, which is $40,000. Then we have already recorded all the items. Our balance CD is going to appear here. Don't forget to write December 31. 70,000 plus 30,000, that will be 100,000 plus 20,000, you get 120,000. I'm going to rub off this asset account because we are no longer using it. Then 120,000. Then 120,000 minus 40,000 is 80,000. Then you record 2017 January 1. You record balance BD. How much? 80,000. This is how you record a motor vehicles account if you are asked by the examiner to prepare a motor vehicles account as required by the question. Now we want to dive into the provision for depreciation account. So stay tuned, guys, as I wrap off the motor vehicles account. Not taking a look at the provision for depreciation account. But before we do the provision for depreciation account in your examination, either A level or financial accounting, I require you to start with the workings. You are not penalized by doing your workings first. What are you going to do? We are going to do the workings based on the depreciation. First, we want to calculate the depreciation of AAA 0473. We are given two motor vehicles. For AAA 0473, suppose on 2014, before we go any further, we are required to use straight line method. When you are calculating using straight line method, remember the accumulated depreciation is equal to the cost minus cost minus residual value over the estimated useful life. This is how we calculate using the straight line method, the formula. Then 2014, we had 2014 we had no residual value on the table. Suppose 2014 it was for the whole year, since 1 January 2014 to December 2014. So it will be 30,000 over the estimated useful life would be 4 years, because they are given that is 4. Your depreciation will be 30,000 over 4, you get 7,500. Then for 2015, no transaction took place. The depreciation will be the same, it will be 7,500. But for 2016, we are not going to take 7,500 as it is. Remember, AAA 0473, we are told that the estimated useful life of AAA 0473 was revised from 4 years to 5 years with no residual value. If there is a revise, if we revise, suppose you need to know that when we are revising in this question based on January 1 adjustment, we are going to utilize the International Accounting Standard 8. But in terms of International Financial Reporting Standards, we are going to look at Section 10 according to the SMEs. Remember, Section 10 of the SMEs, you go and research on this. But in terms of the International Accounting Standard 8, we did not do an error. Maybe we did not do an error, and we did not do a policy change. Suppose there was a new model, maybe, or there was new anything that occurred during the year. But you need to know that in terms of 2016, we are going to utilize the International Accounting Standard 8, application of the International Accounting Standard 8, and the application of the International Financial Reporting Standards, looking at Section 10 of the SME, Small Medium Enterprises. You go and research on that for knowledge enrichment. Then, looking at that, 2016, the main focus is to know that you are going to use the International Accounting Standard 8. And how are you going to calculate the depreciation, given that the estimated useful life was revised from 4 years to 5 years with no residual value for AA 0473? What you do here, you come and you write 30,000, the cost amount minus, then you subtract the depreciation figures which you calculated using the 4 years estimated life, which are 7,500 plus 7,500. If you add them, then you divide with the 5 years, the new estimated useful life, minus the years which you calculated using the estimated life of 4 years, which are 2014 and 2015, meaning say there are 2 years, you subtract. Then after subtracting, you are supposed to get a depreciation of 5,000. Then you add this 5,000. Adding this 5,000, you're going to say 7,500 plus 7,500 plus 5,000. You're going to get $20,000, which represents the total depreciation of AA 0473. We have already calculated the depreciation of AA 0473. We want to now calculate the depreciation of AAI 8600. I have actually explained everything to you in terms of this question. We want to look at the depreciation. I'm going to use this space. Depreciation of it's AAI 8600. AAI 8600 for 2014, how are you going to calculate the depreciation for 2014? I will rub this formula because I have already explained this formula. So it will be 2014, you are going to record 40,000, the cost minus the estimated useful life according to the table, over the minus the residual value, of 4,000, over the estimated estimated useful life of 6 years, which will be 40,000 minus 6 years. But you are going to multiply. Why are you going to multiply? Remember that this question did not highlight that are you going to use per each month of ownership. But you need to know that if you are not told, you record as like 1 September 2014, the period it was bought. It was bought on 1 September 2014, the date of purchase, till the end of the year. 1 September, use your fingers, guys. 1 September, October, November, December. Someone may ask me, why are you counting September? Remember, it was bought on the first date of September, which is 1 September, October, November, December. It will be 4 out of 4 over 12. Then you write 4 over 12. If you calculate 40,000 minus 4,000 times 6 times 4 over 12, you need to get, using your calculator, I already calculated this question, it will be $2,000. Then for 2015, nothing happened. It is going to, we are going to calculate the whole depreciation for 2015, the depreciation for the whole year over 6. 40,000 minus 4,000 over 6, you get 6,000. But we have 2016. In terms of 2016, you are going to calculate the cost, which is 40,000 minus 4,000 over 6 times what? We did remember that AAI 8600 on June 30, it was traded in. Since it was traded in, we are going to calculate the depreciation from the period of 1 January 2016 to June 30, which will be 6 months. January, February, March, April, May, June. We are going to count June because it's June 30. It already worked. So it will be over 6 over 12. 40,000 minus 4,000 over 6 times 6 over 12, you get $3,000. The total depreciation for 2,000 plus 6,000 plus 3,000, our total depreciation will be equal to 11,000. 11,000, the total depreciation. But we are not yet done. We have AAK 9531, the asset which we bought. Calculate AAK. Make sure you take these workings down because I'm not going to repeat them. I'm just going to work them out, and I'm going to show you how you plug them in the provision for depreciation account for the motor vehicles. It will be AAK 9531. In terms of AAK 9531, we calculate in from 2016 because it was bought in 2016. Suppose the cost is 50,000 minus 2,000, the residual value, over what? Over 6. Our estimated useful life was 6 times 6 over 12. Your depreciation will be $4,000 for AAK 9531. I've given you a glimpse of the workings and how we are going to apply them in our formats. Now let's dive into the provision for depreciation account and also in the provision for depreciation account and the disposals account. Without wasting much of your time, we are now looking at what we are required to do. You are required to prepare the provision for depreciation account. The provision for depreciation account for motor vehicles, remember, you record the dates. It will be 2016. A provision for depreciation account, I will do a rough draft of the format provision for DEP account. In terms of the provision for depreciation account, you need to know that it has got a debit, so it has got a credit balance, January 1 balance BD, then you record. It also has a profit and loss. It represents the depreciation of the asset. Then we have, suppose December 31, this is the date, December 31, we have a disposal. This disposal represents how much depreciation the asset acquired from the date it was purchased to the date it was sold. That's what represents this disposal. Then we have the balance CD, the closing balance. Then you record, you close off your account. This balance BD will be a balance BD on this side. Now let's plug in the values using this formula for the provision for depreciation account, doing what is being required by the question. Then we have 2016 January 1 balance BD. Where are you going to get the balance BD? For example, when we're doing motor vehicles account, we use the balance BD for 2016 from the balances where the asset was bought from 2014 to 2015 for 2014. But in this case, you are going to come on your question and you're going to take the balances of 2014 and 2015 from the motor vehicles. I'm going to open brackets so that you know where I'm taking the balances. You're going from AA0473, you combine, you are going to take the depreciation for 2014 was 7,500. So 7,500 plus 7,500 for 2015, 7,500 plus 7,500 plus for AAI8600 for 2014 it was 2,000 plus for 2015 it was 6,000. Adding 7,500 plus 7,500 that's 15,000 plus 2,000, 17,000 plus 6,000 that's 23,000. Having 23,000, you are going to record on December 31. You have not a balance CD. It will be a profit and loss. Someone may record it as the profit and loss. Someone may actually record it as the income statement. You are not penalized for that. The profit and loss figure, you are going to check the depreciation balances according to the workings. For AAA, you're going to take the balance for 2016, which was 5,000, plus for AAI8600, you're going to take the 3,000. For remember, we have AAK9531 of 4,000. You add these figures, you get 5,000 plus 3,000, that's 8,000 plus 4,000, you get $11,000. Guys, it is easy to pass accounting, but I wonder how do students obtain Fs hearing that there was a pass rate of 0% in terms of A-level accounting, while I'm giving you everything like this. You just need to focus and to read. If you are facing challenges on this question, please try by all means to revisit the video even 5 times. It's not a problem, so that you understand, right? Okay, want to look at 2016 June 30 disposal. Remember, in this scenario, we are going to take a look at the asset which was traded in or the asset which was disposed. In terms of the asset which was disposed, we have AAI8600. This asset was disposed. Since this asset was disposed at $40,000, we are going to calculate the depreciation, how from the date it was purchased to the date it was sold. It will be 11,000. We take the depreciation from the date it was purchased to the date it was sold or traded in or disposed. It was 11,000. You record the 11,000 according to the workings. I did the working for that. Then we are done with what we are required to do according to the format which I gave you, and you have a balance CD. You balance off your accounts. Balance off your accounts. 23,000 plus 11,000. You are going to get. It will be 23,000. Remember, this is not 11,000. 5,000 plus 3,000, 8,000. This will be 12,000. 20,000 plus 12,000. That's 35,000. You get 35,000 minus 11,000. You get 24,000. Then it will be 2017 January 1 balance BD. It will be 24,000. We are done with this question. Since I've given you everything, I want you to write down the solution, and let's now dive into the disposal account. I hope I've done justice to this part. I've given you the workings, everything, so that you pass. Let's look at the last aspect of our question, which is on disposal account. Item 3, we have the disposal account. In terms of the disposal account, we open. I'm going to give you a format for the disposal account on this side. The disposal account, remember, you need to know one thing, that a disposal account is no balance CD, is no balance BD, is no balance BD, is no balance CD. It's either you're going to get a profit on disposal or a loss on disposal. So you're going to record the cost of the asset which was traded in, disposed or sold. You record it here. Then you record here, you record the provision for depreciation. What is the provision for depreciation? The amount of the accumulated depreciation from the date it was purchased to the date it was traded in, disposed or sold, whatever. You record it here. Then you record the proceeds from the trade in. Then it's either you're going to have a profit or loss, or here I want you to go and research what does when the balance appears on the debit side, is it a profit or loss? When the balance appears on the credit side, is it a profit or loss? That's your homework for today in this lesson. I hope you're going to go and research. If you don't research, you will definitely meet a paper 1 question asking you calculate for example, you're asked to prepare a disposal account, and in paper 1 they give you answers as $3,000 profit, $3,000 loss. The choice is yours, guys, to go and research or not. Then you are going to write 2016. You record the cost. It was June 30. Motor vehicles of how much? Remember, the motor vehicle which we are preparing the disposal account for a motor vehicle, for a asset of AAI 8600, the asset which was traded in. We just record we prepared the disposal account based on the asset which was traded in. Motor vehicles, it was 40,000. The cost was 40,000 according to the format. Then the provision for depreciation, open. This transaction took place on June 30. The provision for depreciation was 11,000. This figure, if you go back to the provision for depreciation account on the debit side, we wrote down disposal of 11,000. In this case, you are going to record the provision for depreciation of 11,000. The depreciation or the accumulated depreciation from the date it was purchased to the date it was traded in or sold. Then you record the trade-in value. In this case, you are going to record the trade-in value of $30,000. $30,000, not 50,000. You record $30,000. We can see that our balance appears here. You record December 31, profit or loss of how much. You add your balances. 30,000 plus 11,000, you get 41,000. 1,000. I don't know. If I see you writing balance CD here, you have a problem, my friend. Go and read on depreciation if you are facing challenges in terms of this question. I hope I've done justice. But last one for this lesson, let's look at item B. In terms of the question, we are now looking at item B of our question. Explain whether it is permissible for Timothy Limited to change from straight line method to reducing balance method. Our key concepts here is to change from straight line method to reducing balance method. When you are answering this type of question, I want to tell you one thing. Explain whether it is, for example, the first aspect, it is yes, it is permissible. That's the first aspect which you look at, and you get a mark for that. Then on the second item, you look at the reasons why you're saying it is permissible. The first reason, it is permissible when the change results in fairer presentation of its financial statements. You all know what are financial statements. You need to know that you have 5 financial statements and you're going to research on those ones. The first reason is that it is the reason is that where the change, suppose they change from the straight line method, the decision balance method, it will also result in fair representation of this financial statement. Suppose in terms of statement of cash flows, we also have an aspect of depreciation under cash movements, if I'm not mistaken. Then we also have a concept of depreciation even in the statement of financial position, even in the income statement under the expenses section. Then the next aspect, the next reason is that it is also permissible. The other reason is that when the change is according to the company law. When the change is according to the company law or to the company law or the statute, that's the other reason. Maybe the change is according to the company law. Then the other reason is that when the change is in accordance with international accounting standards. Suppose, for example, international accounting standards setting boards, e.g., the examples are the ASB or the FASB. But you're given the reasons, but when you're answering this type of question, I don't know, maybe you'll be awarded with 5 marks for this. In terms of financial accounting, the marks are solid 5 marks. The first mark will be given, yes, it is permissible. The third marks will be given based on the reasons when the change is in accordance with company law, when the change is in accordance with the international accounting standard. Then on the third item, you look at the however side. The however side, you are going to look at the consistency concept. The consistency concept, it also requires that we use the same depreciation method. Why use the same depreciation method? For comparability purposes. That's why we actually use it. Comparability purposes in terms of its financial statements. I hope this lesson today was fruitful to all of you. And I hope that you are doing your best in terms of exam preparations. I wish you the best. To those who need my assistance, my number is on the screen and you can actually get in touch with me for those who need further assistance. Have a great day.